how many people out there today would like to win more, would like to make more money, would like to basically move themselves from having to work their full-time job and slowly start to transition to trading futures, right? You probably clicked on this video for a reason because of the title of it. How can you go about making your first $5,000 trading the future markets, in particular the equities? Maybe you have an interest in trading, say, the NASDAQ, the E-mini S&P 500, the YM, which is the Dow, or the Russell. Now, the strategy and how I trade, you could trade any particular market. Yes, I'm talking about even Forex, options, stocks, because it all centers around one key concept, which is supply and demand. And you may be asking what that is. Aggressive areas of buying and selling in the market. Is it difficult to be able to identify and see those areas? No. I'm going to show you today on the charts. Now, is there a certain strategy or system that you must follow to be able to take trades like this? Yes, but some people do trade supply and demand a little bit different than, say, for example, the way I do. But I truly believe that to the utmost, I should say, that the best way to trade supply and demand is really understanding the structure of the market. You've got to understand, first and foremost, like which way to trade. Okay, if you're trading against the grain and the market is moving to the upside, why would you be wanting to go short when the market is on a higher base chart or higher time frame is moving to the upside? Trading with the direction of the market, okay? Trading with the banks and institutions. Seeing the areas on the charts where there's aggressive areas of selling and buying, where you can engage an opportunity to scalp, okay? For me, I like to do this each and every day. I don't swing. I don't position style trade. Who wants to sit into a trade for hours on end, even for 30 minutes, okay? Or who wants to sit in a trade for days at a time? Now, if you have the capital and that's something that you like to do, and it's an easier method for you to be able to do so, then that's fine. But I find that scalping is a whole lot more easier to trade because you can get in and get out. I'm only looking for 1 to 2 quality setups a day, and that's going to be it. I can compound an account quicker doing it that way, and I feel as if I can minimize my risk just as well. Okay, now if you swing or position style trade, then you're going to have to sit there and have a larger size account. You're going to have to incur probably loads of drawdown before the market moves in your direction. I'm looking to get it in and out of trades between 2 to 5 minutes, all right? And this is how you can build up an account small, starting with $500 or $1,000, and grow it to within, your first, I'll say 2 months, depending on, how much you're actually leveraging in the market, to your first $5K or $5,000 a month, all right? All from trading the equity markets, okay? Now, this is how you go about winning more trades and becoming successful in doing so when it comes to the future markets. So if you're watching this, you clicked on it for a reason, like I said. So sit tight, watch the video to the end, because I'm going to show you the strategy and how it actually works. Look, you can see my NASDAQ chart right here, right? What do you see, okay? You should be able to detect and see that the market is moving to the upside. You should see also that we are in a channel to the upside from here to here, bullish. Highs, higher lows, highs, higher lows, hot. So you should be able to see the movement within the market, okay? And as long as the market is doing that, what should you be trading? Okay, I'll give you 5 seconds to answer that to yourself, all right? 1, 2, 3, 4, 5. Only setups where demand rests at, meaning the market is bullish. I'm looking for high probability areas where there is aggressive buying at. You're basically looking for pullbacks, the key areas of demand, so you can take the trade going back to the upside with the banks and institutions and not against them, okay? If you think you move this market as a retail trader, you have got yourself twisted, okay? So let's move forward, all right? So a couple things that I'll look for. First, I want to figure out the direction of the market. The second most important thing that I have to see in my trades is there what? A break of structure, okay? Where the market has basically taken out whether it's a high or a low. But I like to see, and I gotta see, this is what makes it really a break of structure to where it's a beautiful area of either V shape or A shape. Like here, push up. Aggressive pullback, okay? Aggressive selling to the downside, and then we get a push up. This is a nice V shape. This is a break of structure above highs. Same thing right here. Push up, pullback, okay? Nice aggressive selling to the downside or nice pullback, followed by another break of a high. That is also a break of structure to the upside. So I've got to have that, all right? You must see that. And coming out of those nice structural breaks, either to the upside or the downside, is where you're going to find beautiful areas of what? Demand or supply, okay? Because once the market pulls back on a retracement, we're selling off or selling quite a bit or retracing, then you're typically going to get lots of buying. See the big green candles to the upside here, and then we finally break structure to the upside. That's where we're going to look for opportunities for pullbacks to go what? To go long. Like right here. This was a pullback to a key area of demand, even though it was low probability, still a valid demand area where aggressive buying broke above this area of structure right here. So now we've got a pullback to this demand area, okay? Now, when it comes to low probability and high probability setups, I'll talk about that in lots of videos here on the channel. Please spend some time watching the video content, and I assure you, you will learn the difference between the two. All right. Or simply go to the home page and type in imbalance gaps. And that's where you're going to find a list of videos that are going to populate there and what you can watch. And I go into detail about the gap, okay, or about the imbalance back at the actual zone. So structure is important, first and foremost, crucial. Secondly, the break of structure. What do we have? We've got to have that. All right. You also must have to make it a high probability and imbalance resting back at the zone. I'm giving you a rundown of how you can go about trading the equity future markets, simply scalping these indices, okay, each and every day like I do, all right? You can also use the same strategy, like I said, to trade various other future markets like commodities, grains, metals, the financials like the bond markets, whatever it is you love to trade. This is how you can go about doing it using the same strategy. You don't need a bunch of different strategies. You don't need 2, 3, 4, and 5 strategies. One strategy is really all you need, and basically just a pair of markets. Okay, it could be 2 indice markets. You could trade, say, hey, I want to trade the NASDAQ and maybe trade gold, or one of the currency markets in one of the equity markets. Whatever it is you want to trade, pick it out, learn the strategy, and trade it. This is a very simple strategy. Now, what I like to do most times, if I get the opportunity, is always mark up a higher time frame zone because they hold more weight. Can I trade specifically directly from a lower base chart without, waiting for a larger zone to be, retraced back or filled into? Yeah, I can. Okay. Lots of times, especially this week, I'm using my 24 range trading chart or 24 range, bar chart, okay, to take trades. I'm scalping that way, but what is most important is I want to see and I need to know what is the higher base chart, looking like. If we are bullish, I'm only looking for scalps 9 times out of 10 to the upside on my lower base charts. You can counter trend trade, but if you're a beginner trader just starting off and you're starting from zero, please do yourself the biggest do yourself the biggest favor, and that is to basically trade in the direction of the market itself. Now, for example, like today, this right here, pullback right here, this would have been a beautiful area to trade off of a high probability. We got to break a structure above these highs. Pull back, retrace, nice selling, followed up by aggressive buying, leaving this area of demand right here. High probability. We got a small imbalance right there. But the only thing that took place right here, and the only reason why I didn't engage in this opportunity. Now, I'm going to mark it up. I'm going to show you because this is a high probability demand zone from a higher base 120 range chart. Pull back to it, but if you go and look at a Forex calendar, I'm not saying Forex calendar, a economic calendar. I use forexfactory.com. That's the reason why I said Forex, but I don't trade Forex, but I'm just telling you that's what I look at is that economic calendar to give me an idea what is on the calendar for today when it comes to economic news. Okay, some is low, some are maybe low impact, medium impact or high impact. Please stay away from the medium and high impact news. This was ISM, I believe was today, if I'm not mistaken. Matter of fact, let me take a look right quick. Yep, we had ISM right here, manufacturing right at 10 o'clock today. Okay, all right. So that's why the market blew right past that. Please do yourself the biggest favor. Do not trade at a time when the market is, getting close to an economic news event. All right. You will see, and once you learn, spend enough time on these charts, you will see that. And a lot of you probably are watching right now and saying, yeah, I made that mistake. I won't do it again. Understanding and learning that if trading around a major economic news event, okay, regardless of whatever you're trying to trade, even if it's a high probability setup, the market can blow right through your zone. So please stay away from those areas, okay? But again, this was a high probability setup, but the only impactful thing was the news event right there, all right? But if I was to show you just an example right quick and using, because I like to trade multi-chart Confluence. That's what I'm trying to get you to understand, is when you first mark up a higher time frame chart and then move down to your lower base chart. Like, for example, like right here, this was a breaker structure lower. We have this area of demand, supply right here, where it pulled back to the market held. You could have traded this if you scale down to a lower base chart to look for an opportunity to trade it once you move down. So the way I would do it is I start with my higher time frame chart. We're bearish to the downside. We got a low followed by a pullback, nice pullback, breaking structure, aggressive selling to the downside, pulling back to the supply area right here. Once it taps into my 120 range, say supply zone, then I just move down to, a lower time frame chart. It could be whatever the chart you use, okay? For me, I'm moving down to a 24 range chart. People always ask why I trade range charts. I probably said this. I can guarantee you this is probably the most favorite thing I've ever said on this channel is people always ask the same question. Why do you trade range charts? They're cleaner to the eye. I can see structure. I can see things unfolding on this chart a lot cleaner than any other chart to me. I don't have to worry about the large wicks and big body candles, especially the wicks and things like that. But when it comes to momentum, when it comes to volume, I can read it a lot cleaner to the eye. If you trade other charts, take volume, time-based, whatever works for you, and it's easier and cleaner to the eye, continue with that. Trade what you know. Okay, and what is working. Now, this is a pullback to a key area of supply right here. All I do then is just move down to my lower time frame chart. I will already have this zone marked up once we broke this area structure right here. Once the market is retracing or starting to retrace back, I'll start to move down to my lower time frame to see if I can capture a 24 range supply zone on the inside. That's high probability of this zone here. That's going to give me Confluence on two charts, higher time frame, lower time frame. Okay, if that makes sense. When you have those type setups, where you have multiple Confluence across multiple charts, where the market is tapping into multiple chart zones, say for example, this starting with number one, the higher time frame. Then let's say you move down to one chart lower, and you got a zone on the inside of the larger zone on a lower base chart. There you go. Okay, and then you move down to your final entry chart. Then you can look for opportunity to go short from there. If I said long, I'm sorry, short. I meant to say short. But pull back to this area of retracement to this supply zone right here. Is a valid area too. Now, people always ask, can you go short or long right at a higher time frame zone? Yeah, you can, but it's it's risky because you don't know the amount of drawdown that you're going to actually incur before it actually moves you in a direction. For example, like right here. If you were taking this trade, say for example, right here, and you got an aggressive, guess what? The market would have did some damage to you right there. I mean, just these 1 or 2 candles, that's a big push to the upside from 346 back up here to 370. So that's a lot of points that you were taking in drawdown before it came back down here. I'm not doing that. I want to be able to minimize my risk and maximize my profits for one by narrowing down, zeroing into this zone right here, but on a lower time frame chart. It allows me to be able to get into a more precise entry point. Hopefully that makes sense. Okay, now let's look at this from a lower time frame chart. Here it is. I'm on my entry chart, my 24 range, the large box from the 120. Again, like I said, mark up your higher time frame chart first. All right, as the market is retracing back to your zone, start to identify to see, is there a lower time frame or lower base chart like the 24 range, whatever chart you take your trade from, where there's a demand zone resting on the lower time frame chart on the inside of the larger zone right here. Okay, right here. We can see it back up here, aggressive selling to the downside. It's on the inside of this zone here. I'll wait for the market to retrace back to it, and once it taps into it, I'm looking for rejection with the break and close of a candle below the last, say, up candle, the bullish candle, to enter to go short. All right, stop loss is going to go at the back end wherever the market rejected at, where you took your trade at. So if I took a trade, once it tapped into the zone, higher time frame, lower time frame, market retraces to the zone, and then I get into the trade at the break and the close of the last bullish candle to the upside, I'll get in here at 359. Now, I'm probably getting an aggressive here because I got the Confluence at 365, but if you're a beginner trader, more conservative style, please wait for the break and close of this candle here to the downside below that bullish candle, and then execute and go short. Now, stop is going to go on the back end wherever the rejection took place at the actual lower time frame or lower base zone right here. All right, so above 21,368, give yourself maybe 3 or 4 points because they love, like right here, to pull back. A few more ticks, and you had your stop loss right here, they probably would have stopped you out. If you're stopped sitting up here, they never came back to it, and then it starts pushing to the downside. This works, okay? So that's what I'm trying to get you to understand is first and foremost, understand where to place your stop at. Now, people say, how can I maximize the trades too, just as well? All right, you can do that. So let's say you got to the trade and you're in the trade here. Let's say the market comes back. This is your break-even point, okay? But your stop is up here. It hasn't stopped you out. Each time the market makes a new lower high to the downside, move your stop accordingly. So if it's sitting right here, move it here once it breaks below this structure right here. Break below, pulls back, your stop's going to go right here. Each time it makes a lower high, move your stop from here to here. Makes a low, lower high, break structure from here to here. This is going to help you maximize the profits, okay, and keep you to a trade. Now, you can take that first 1-to-1 or aim for a 1-to-2, whatever the case is, but a 1-to-1 is fair enough. Take your profit there, and then trail with your remaining contracts or contract, and allow the markets to as it's making lower lows and lower highs, move your stop accordingly from the last lower high down to the most recent lower high. That's what's going to help you stay into a trade longer as well. But I wanted to cover this because this is how I do trading when it comes to the future markets 5 days a week, and I'm able to be consistently profitable day in and day out. I always talk about the number one thing or way to trade is to be green on the day. Now, if you take a losing day, don't spend time and spin wheels. This is where people get into the problem with the psyche and the psychology behind it. Revenge trading, they took a loss, they want to try to make it back, they do another trade. If you start to allow things to spiral out of control, you're going to find out sooner or later you're going to blow through multiple accounts, all right? But this is the easy way how I go about trading. If you want more information and you want to dig in a little bit deeper and learn more, please spend some time watching the video content here on the channel, because I really go into much detail about from setups, about the strategy. And if you want to become really want to get the full on learn things and really educate yourself, look, you don't have to, I'm not a mentor in a sense. Okay, I don't have a mentorship program, but you can basically educate yourself by watching the video content. And if it doesn't work for you, then move on. Okay, I'm gonna simply say that, because some people I know can be stuck in their ways, may have learned something in the past that they just can't, let go, and they think they need it. But sometimes learning something fresh is really an eye-opening, right? So what I'm trying to say is this: if you really want the nuts and bolts, kind of the full-on version of how I trade, you want to see things more so behind the scenes, especially when it comes to the breakdowns of the trades that I post over on our Discord community. And by the way, the Discord is free. The link is down in the description portion of the video. You may want to become either an elite or an ultra elite member. That's up to you, okay? But what you receive with that are, for example, to become the basic elite member, tier level, the tier membership program, or part of the tier program, and it's very inexpensive. I'm gonna say that now, okay, guys? It's only pennies on the dollar a day. What you receive are my trade breakdowns. There are tons of those videos there where I walk you through setup after setup and breaking trades down, the same ones that I post over on the Discord, so that you can grasp an understanding what I was thinking, why I took those trades, where to place your stop, where to take your profit at, things like that, so you can look for opportunities yourself when you're back testing and forward testing, and specifically strategy yourself, okay? But structure is everything. Please do yourself the biggest favor and learn structure. So not only do you get the trade breaks down, you get the great video that I covered around market structure, as well as the video playlist. All that for pennies on the dollar a day. I think it's like 25, 26, 27 cents on a day, okay? Adds up to be like $6.99 a month. If you want to become an ultra elite member for $14 a month, that's like 49 to 50 cents on a day, okay? I'm trying to rush through this, but I'm trying to make this a kind of a shorter video, but I'm already at 20 minutes. I know, sorry guys. But anyways, yeah, $14.99 a month. That is it. You get everything from the first elite membership program, which is the trade breakdowns, video playlist, and the market structure video. But you also get my live recorded trading sessions where I go in detail, where you're like, basically it's like sitting next to me. As I'm sitting here trading, okay, I'm recording my trade setups. I'm walking you through the video content. I'm not walking through the video content. I'm walking you through structure. What am I looking at? Why am I looking for certain things to happen? Why am I taking certain trades? So I know the live recorded trading sessions have been helping lots of individuals out. Plus, you also get like the market recap videos as well. That's where I go back on basically the end of the day and I recap the trading session for the day. Overall, looking at structure, talking about setups that possibly I took, as well as other opportunities that I may have missed, especially in the afternoon session. There could have been more setups, but I don't trade in the afternoon session, so that's why I go back and I recap those. I don't do these videos every single day, like every day a live recorded trading session or market recap video. But what I'm trying to say is that I do several a week, 2 or 3. So there's enough video content there, and it's slowly compounding every single, week. So there's tons of video content there already that can definitely help you. All right. And plus, I'm only, fingertips away. If you want to kind of reach out to me, you can DM me over on the Discord, which is free. But both links are down below. If you want to become either one of the elite or ultra elite members, the link is right below the Discord link. Click on that. You'll see 3 tiers. Choose which tier you want to join. It's all surrounding. They both, you'll see the difference because one may have different perks than the other. And if you want to become the ultra elite member or supporter of the community, then you receive all the perks. Okay. All right. Without question asked. All right. So that's all I have, guys. I appreciate it. If you have not already clicked that subscribe button while watching today's video, make sure to click the subscribe button. I greatly appreciate it. Make sure to turn your post notifications on by clicking that bell. And if you did not click the like button, go ahead and give the video a thumbs up or a like right now. I would also appreciate that as well. See everyone in the next video. To all my community members out there and those that really support the channel, I appreciate it. Take care. And tomorrow, I'll be trading tomorrow. It's Thursday in the morning session only, okay? Of course, because that's all I do trade is the morning session, somewhere between pre-market and up to about 11 o'clock. But that's going to do it. Appreciate it. See everyone in the next one.